Surana, who's the CMD of HPCL, and this is going to be an important conversation, joins us to talk about how business is shaping up for them in this sort of a tough, challenging environment. Mr. Surana, it's great to have you on the show, sir. Thanks very much for taking out the time. Give us your sense of the crude realities that we are faced with right now.
Good morning to you. As you have seen that the last few days the crude prices have been continuously rising. It is almost touching 80 now, and it is a combination of multiple factors. The initial OPEC cuts, subsequent Venezuelan problem, then the unstable crude supply from Libya, some reduction in Angola, and then subsequently the Iran effect. And that has driven the prices to a certain level, and added to that there is substantial amount of speculation work in this crude prices, which is always moves in the direction of the momentum, and there is a substantial longs in the system which has driven the crude prices to the higher levels. Going forward in the immediate future, these prices are likely to be more in the range of 75-80 rather than expecting it to retract to 70 level, though I still believe that a long term stable pricing is more towards 70 than towards 80. They added to that now the most of the refineries which have been in shutdown will be coming back on stream. So in the near future, let's say a couple of months, we expect prices to be in the range of $75-80 for the crude. The second aspect is that normally when the exchange rate is stronger, when the dollar is stronger, the crude prices are lower. But this time, because in general the dollar is stronger compared to many currencies, the effect of a stronger dollar leading to a lower crude price is not being seen. But on the other hand, the WTI to Brent spread has increased. It is almost over $5. That means that the US crude supply is higher. Of course, they have got some structural constraint to export the US crude oil, but WTI crudes are becoming attractive in this process.
Mr. Surana, let's get a little personal here and talk about how this crude spiral up impacts you, because there have been 3 small hikes in the last 3 days in both petrol as well as diesel, about 15 to 17 paise each day roughly, after a long pause. What's the additional difference, sir, which needs to be covered still?
No, I would not like to give the specific number as of today, because we also got the board meeting coming very soon. But I said earlier also, we keep on seeing the international prices and the possibility of maintaining it, at the same time keeping the financial health of the companies. So to ensure that there is a consumer affordable pricing or the consumer convenience, at the same time the company's financial health both are under balance. Because the crude prices are continuously being maintained at higher level, added with the exchange rate higher, we have to pass on certain amount of the increase which has been done. And we will keep on watching, and as you know, this is a rolling pricing. So immediately if a crude is high on that particular day, will not reflect in the pricing immediately. That will be an effect of the averaging over a period of time. At the same time, it is not just the crude, but the international product prices which determines the prices of the products, and the exchange rate, of course.
Surana, I think the larger issue is the signaling that goes out with these small price hikes. And I'll very blatantly tell you the concern in the market. The concern in the market is that if prices spiral up even further from here, then at some point in time you may have to take that burden, because you know petrol and diesel are price sensitive issues for the retail consumer. Has there been any communication to that in that regard between the ministry and yourself, or has it really been strike a balance between profitability and servicing the end consumer?
No, No, as of today, MS and HSD is a decontrolled commodity, and the oil companies decide the pricing of these products based on the international prices of the products, the exchange rate. International pricing of the products will be guided by the crude prices plus the cracks of the individual products. So, also a demand supply of the individual products also come into picture in addition to crude supply demand. And as of today, there is no rollback, rather a hike in the prices demonstrate that the prices are decontrolled on these two products, and we will keep on watching it, keeping both the issues in mind. One thing is the financial health of the companies and the consumers' convenience on this.
Basically, communicating to your investors and viewers at large that if prices internationally were to go up, in the wake of a double whammy coming through with rupee also testing 68, that you would consider further price hikes if the case demands that.
See, we are watching the international prices very closely, and we will continue to determine what is the prices should be on day-to-day basis and how much we should be passing on to the consumer, because the companies will also have limitation not to pass on if the crude prices remains high or the product prices remains high and the exchange rate is also high. But we are conscious of the consumer sensitivity on these products, and but at the same time the companies have to survive on their financials as well. So, we have to balance the two, and there is a substantial amount of tax elements also which the government will be keeping track of.
Mr. Surana, but I bet your marketing margins must be getting impacted from what they are currently to what they were 6 months back.
No, as I mentioned to you, because we have got a board meeting very shortly, so I would not like to respond to specific questions on the company.
Understand that. I was just wanting to gauge a direction, not really get individual numbers. But anyway, let's move forward, sir. Tell us what is really happening considering 40% of the fuel price rise continues to be taxes. Is there a case building in your view to rationalize excise in order to comfort consumer sentiment? Because that is also a key factor, like you just rightly mentioned.
No, taxation is a government subject which includes both the central government as well as the state governments, because MS, HSD, ATF, crude and natural gas are not under the GST regime right now, and any possibility of considering a reduction in taxes will be helpful to the consumers. So, as a companies we will be happy if government was to consider any reduction in the taxation. But it is subject of the government, and it would not be appropriate for me to comment on what should be the possibility. But on a longer term, bringing these products under GST can be one solution. Of course, there are also, we need to see that what is the level of GST will be there are the state revenues involved. All these items need to be settled by the GST Council, but there is a case for considering these products under GST.
No, and I think that noise is only getting louder, Mr. Surana. But suffice to say that, you know, at this time, an excise duty reduction is perhaps the balancing act that you were referring to earlier on. In the wake that, you know, we are staring at a very busy election season, and we all know that historically election season means more price sensitivity to dear goods like petrol and diesel. So do you think the balancing act where, you know, your company also doesn't get burdened with rising oil prices and consumers are also not passed on the responsibility is in duty reduction?
So, all the three have to balance the taxation, the company's financials and the consumers' affordability. All these three are to be balanced, and all the three can do whatever they can do. That's what I will say as of this time. So, it is definitely for government to consider the possibilities of tax rationalization.
Mr. Surana, I'm sorry to interrupt you, sir, but how much duty reduction would you seek at this juncture? A rollback from the increase that we saw about 16 months back?
No, how much is a difficult question to answer, because it is for the government to decide that what is possible, what is not possible, whether it should be done, whether it should not be done, because government will also have the a budget to balance on their side. So, but any possibility of a reduction in taxes will definitely be helpful to manage these situations.
Right. Mr. Surana, you know, in the month of April, we've seen a sharp 40% uptick in the oil imports as per official trade data. Does that also mean that companies like HPCL may have ring-fenced themselves from higher prices for some time? And could that be the reason why you're all stocked up right now?
No, each companies have their own strategies of dealing with the risks. To some extent, there are certain mitigation measures taken by the companies, but the import is also to demonstrate the, as far as HPCL is concerned, because we sell more than what we produce. So the balance quantity either we import or we take from other standalone refineries. When there are shutdowns in the Indian refineries, there are net imports. So there is a regular demand supply balancing which we do on month-to-month basis. So hike in the import is not directly related to the pricing impact, it is more to balance the demand supply. In the process, if you have tied up at a proper time, it may provide you certain cushion, but normally the product supplies happens, the pricing happens on the date of supply. And to some extent, if there are any changes, that gets reflected in the pricing ultimately. Except the discounts or the premiums, if they are tied up earlier, they will not have impact of the speculations.
Mr. Surana, I know you perhaps would be thinking that we keep coming back to the issue of under recoveries and pricing of petrol and diesel and the whole deregulation matter, but that's the most compelling piece that viewers want clarity on. So there's just one more aspect of it that I want you to clarify for the benefit of our viewers. Who, in your mind, will fund the under recoveries coming through for selling subsidized kerosene and LPG? The government, you think, ONGC, Oil India, will the responsibility be shared?
No, as far as LPG and PDS kerosene, that is the domestic kerosene, ration kerosene, the subsidy is right now borne by the government, and that is the situation as of today.
Mr. Surana, it's great to have you on the show. Thanks very much. You know, it's very important that you clarify these issues.
Thank you,
because it has had a bit of an overhang on the stock prices of oil marketing companies of late. But thanks very much for being candid and being open with us this morning.
Thank you so much. Thank you so much. Right.
Great to have you.
Thank you so much.